Good morning and welcome to the second day of the Bristol Tech Festival. For those of you that don't know me, I'm Ben Shorrock. I am the MD of TechSpark and I'm one of the co-founders of the Bristol Tech Festival. Hopefully, since you're here, you know what the Bristol Tech Festival is. But just as a little reminder, the Bristol Tech Festival is in its second year this year, and the idea is for us to act as an umbrella and a framework for lots of people across the city to be able to showcase and learn and collaborate on some of the amazing technology and companies that are being developed in the region. What we really want to do is make sure people across the city, from young people to old people, all the different districts of the city, can really understand the amazing scale of work that and really see it as an opportunity for them as much as for anyone else. It goes without saying that the festival wouldn't happen without our amazing event partners and sponsors. So if you haven't seen them in the reception area, our sponsors are in there. Please do click on them. Go and, well, you can't really buy things from the university, but please go and engage with those sponsors because it'll help us get sponsorship next year. And it all helps the messaging. That's pretty much it from me. I will be here for the whole event and in the chat. So if you want to know any more about the festival or indeed about TechSpark, please do message me. I think I'm called Tech Festival today. More than happy to have a chat. But without any further ado, I'm going to hand over to Helen, who's going to be looking after the event today and chairing the session. It sounds like it's going to be really exciting, so you have signed up to a good one. So no more from me, but over to you, Helen.
Thank you, Ben. And I think you're right, it is going to be an exciting one. And thank you for inviting me to host this session with Moneyhub. I'm absolutely looking forward to it. So what we're going to do this morning, just if I can give you a run through, we're going to first of all hear from Dan, the CTO of Moneyhub, and he will share his amazing insight. Now, Dan has been in the industry for, since Adam was a lad, really, since day one. And then we're going to invite the other members of the senior management team to share their learnings and their insight too. So my role really here is to keep us on time and to encourage you to ask questions and to look at the poll. But before I do that, let me just tell you a little bit about myself, and I will keep this short. For those of you that don't know me, my name's Helen Child. I'm the co-founder of an amazing open banking community. We're now a global community of fintechs, big techs, banks, and regulators. And it's an absolute pleasure to be here with Moneyhub. They are absolutely key and instrumental in the ecosystem. So for those of you that don't know about open banking and open finance, you're in for a treat. For those of you that do, please do ask some questions because they really do have an amazing insight to share. So Dan, I am delighted to be hosting this session with you. Good morning.
Good morning. Hi, Helen.
For those of you that don't know Dan is the CTO of Moneyhub. And as I said before, he has been with Moneyhub for many years and he's one of the founders really of our industry. So please do ask Dan some questions in the chat. And if I could just give one last plug for the poll, there's two questions, very, very straightforward questions. So please don't be shy. Do you know what open banking is? Yes, no, binary answer. And do you know what open finance is? Yes, no, binary answer. So, and I will keep sort of nudging you along on that as we go through. So Dan, when you're ready, please share your screen. I will let you know when we can see your screen and then go on mute. And I can absolutely assure you, everybody, you're in for a treat. So how are we doing, Dan?
I think we're getting there.
Is technology working? I can see your screen, so I will literally just go on mute. And over to you, Dan.
Fantastic. Thanks, Helen. What a great introduction. So today I'm here to talk to you about why I believe now is the time to innovate with open finance. I love doing sessions like this and seeing live reactions. Obviously, in 2020, we don't get live reactions. I get to look at a picture of myself. So if I say something interesting, controversial, or confusing, please feel free to put an appropriate smiley, emoticon, emoji, or word, depending on your demographic and preferences, into the chat channel, and I'll try and pretend that we're doing it in person based on your reactions. So yeah, keep me going, please. So during the session, we'll be doing a whistle-stop tour of open finance. I'll set out the scene and cover what we mean by the Amazonification of financial services. I've been practicing saying that all night. And then I'll cover open banking and call out why it is a piece of the open finance jigsaw. To bring all of this to life, I'll share with you some recent examples of work that we've been doing in open finance. So that sets the scene of what we're going to cover. But first of all, let me introduce myself. So my name's Dan. I'm the COO at Moneyhub. I'm driven by helping organizations build truly valuable propositions. I've worked in product management for the last 20 odd years, which has gone a lot quicker than I would have liked. Working for very large companies, originally in telcos when that was very exciting, we're doing prepaid billing, through a few startups and eventually working for Experian for about 10 years before joining the Moneyhub team to build Moneyhub, which I'm super proud of, and I'm sure you'll get a little bit of a flavour of that as we go through the session. For those of you that don't know Moneyhub, we're the leading open technology platform, having co-authored the open banking specifications being used in the UK, Europe, Australia, Japan, Hong Kong, Brazil, Canada, and soon to be in the United States. The reason that we led this global innovation is because we believe in the open data economy. So while open banking is one-dimensional, open finance adds a second dimension. And open data is a utopia where we get a full three-dimensional picture for the consumer, and the consumer can then share that with people that can help them. If you're not familiar with open banking at all, the best way to experience it is to download the Moneyhub app and try it out. It's incredibly simple to do, whilst being really safe and secure at the same time. So available on the App Store, or if you want to just try it out in a browser. Later on, I'll give you some examples anyway, and we'll give you another way to try it out at the end of the session. So without any further ado, let's get on with the crux of the matter. So what is open finance and why is it important now? So I know we all work in really different sectors, but I genuinely believe that any business can benefit from open finance. There's a lady here called Angela Strange. I really recommend you watch the video that she did in November last year, where she talks about the Amazonification of financial services. It's fascinating. But the crux of it is this. Before we had Amazon Web Services, if you had a brilliant idea, you had to go out and buy expensive computer hardware, typically from someone like HP. You had to find a building and add a server room. You had to spend ages wiring everything up, testing it, and then usually trying to iron out lots of very hard to spot bugs. And all of that before you wrote a single line of code. And then when your idea took off, when your business was doing great and you're scaling, you had to repeat all that again in order to be able to have the capacity to grow your business. Well, Amazon thought that was daft. I'm not actually sure if they use the word daft. In my head, that's how I imagine the Amazon boardroom went. But anyway, a long story short, now any of us wanting to launch a new solution can make use of the low startup costs and almost infinite scalability that you get with Amazon Web Services. So that insight was the catalyst for open finance, where the unbundling of financial data and services means any organization can embed seamless insights and payments into their propositions. And without having to rely on third parties that currently have a stranglehold on the industry, such as credit reference agencies, banks, and WorldPay, which underpins Visa and MasterCard, and therefore all the commission-based payments. Instead, you can use an aggregation provider such as Moneyhub to do all the wiring and security and scalability to give you access in a seamless way to hundreds of banks and thousands of other financial services providers directly, all driven by consumer consent and ready for you to leverage that insight and customer needs in your distribution channel. So it really is quite a shift and quite an unlocking of services that have previously been unavailable. So we get a lot of talk about open banking, and we talk about us being open finance. So sometimes it's good to just kind of discuss that and make sure it's clear what the differences are and how they complement each other. So when it comes to finances, there are three main questions that all consumers have, whether they're super wealthy or budgeting or anywhere in between. They all have these same three questions. What have I got? What do I need? And how do I get it? So you can imagine if you're super wealthy, what have I got? It becomes quite a complicated question. But for everybody, what do I need and how do I get it? It's a really important set of questions to answer to get you on the journey to financial wellness and to optimize your finances. So open finance is a consumer consent-driven approach to answering these three fundamental questions. And while Moneyhub has always been focused on open finance and has never been limited to open banking, we've been able to bring all of your finances into one place. So property, mortgages, credit cards, current accounts, loans, investments, pensions, definitely missed some, but so on and so forth. And by bringing it all together and seeing it in one place, that answers the first question. What have I got? And it gives great clarity and control, which is utterly essential to achieving ultimate financial wellness. We then categorize the data to work out what is needed. If data really is a new oil, which at my previous employer, that's what they used to always tell me, then refining it is absolutely essential to making it useful, just like oil. And our machine learning categorization engine answers question 2. That's absolutely paramount to everyone, and that is what is needed. So finally, to answer how do I get there, we surface insights and nudges to highlight the opportunities and to enable seamless action. So some of how this is done varies from different use case to use case and largely depends on the enterprises that we're working with and the value exchange between their products and services and their own customers. But the core concept is the same. Consent-driven sharing of data in order to better the consumer's position and to interact and engage with the enterprises that they choose to engage with. Open finance helps people solve real-world problems, such as applying and being approved for a mortgage, completing tax returns, making savings an everyday habit, getting rid of credit cards and debit cards, enabling instant payments by direct bank transfers, planning for retirement or career breaks, working out how to cover things like maternity and paternity leave in the best way, and even some really more financial technical challenges such as live cash flow forecasting. In contrast, the open banking legislation, sometimes referred to as Payments Service Directive version 2 or PSD2 for short, because in finance we might be going through a really exciting time, but we like to remind everyone that we can be boring too. So PSD2 is a core element of open finance. It has finally unlocked bank data and put it into the hands of its true owner, the consumer or the business to which it belongs. The bank remains the custodian of your money, but it does not own your transactional data. So if I like going and placing a few bets on the Grand National or having a pint with my mates, that's my data, and as such should not be sold off without my knowledge. I might want it sold off. I might get a better deal on Bet365 if they find out I'm betting with one of their competitors, but that's my decision for me to sell off. So open banking's been a great kind of first step for a lot of organizations and certainly a good solid step into the wider legislation around open data that we continue to push for. It basically means that with consent, we can aggregate bank accounts, current accounts, and business accounts, and put that fine-grained data to good work. And no matter what your business is, don't dismiss open finance. It really is just the beginning, and it's incredibly exciting. So to just kind of put this into context a little bit, when we first started rolling out, not we, Moneyhub, I can't claim that one, but when we, the human race, started first rolling out electricity and making that available in people's homes, we just could not imagine that one day we'd be charging electric cars and driving them around. It just wasn't imaginable. And so remember that when you're thinking about open finance. The opportunities here are similar to when we had electricity, and I really don't think I'm over-exaggerating that. So since we've talked about cars, one of my favorite topics, since it's talking about cars, I wanted to drop this slide in just because I think it's brilliant. And you may well have seen it before, particularly if you work in product management circles. It's one of our favorite go-to slides. But in the year 1900, you can see there's mainly horses and carts, and one little car. Just I've circled it for you for speed, so we don't have to spend too long looking for it. And people said when they tried to introduce a car, cars are no good. They don't go as far. They can't go through Ford. Lots of different problems with them. They're noisy. And then just 13 years later, exactly the same part of that street in New York, it's almost impossible to spot the horse. So despite all the problems and all the naysaying, in 13 years, you went from all horses to all cars. So just imagine what you can do now with the technology and data available to you. And consumers have an insatiable appetite for tech-led products. I think hopefully everyone on this type of festival would agree with that. But if you think you've got 13 years to get your house in order and work out what your strategy is, then definitely think again, because the pace of change is absolutely phenomenal. So that's kind of a bit of background into open finance. I thought it would be interesting for people to see a few examples that are live now and in use. And I've just selected a very small handful of our current clients to just walk you through what they're doing. So the first one up is Mercer. They are the world's largest outsourced asset management firm, and they approached us with this problem. So pension modeling tools are typically overcomplicated, arduous, and stressful to use. They provide no real motivation or incentive for people to come back and engage with their finances. I will be shocked if there's anyone in the chat channel now going, no, I love my pension modeling tools. I think that's a really fair statement. And so we went about tackling how best to help them. And we worked with Mercer, and they've created, using the Moneyhub technology underneath, the Mercer Money platform. And this provides people opting into the Mercer Master Trust pension scheme a complete financial wellness tool. It helps them save money day to day through using some of the nudges you can see there on the screen. And it helps them plan for the long term with modelers, but with modelers. So for example, here you can see an open banking powered deterministic goal seeking retirement planning modeler, or because that's a really technical anyway, which is why I was laughing. I always have to have that written down at the bottom of my screen to remember what to say. So I'll put it in better terms. So the way I would describe it is we take your open banking data, we analyze your lifestyle as it is now, and we help you make choices to achieve your desired lifestyle in retirement, which we can predict again using open banking data. And no matter what your age, you should be thinking about pensions with a different lens. And so by applying open banking and tying it back to the real world and tying it back to your goals and aspirations that you've got now, it means we can have a really sensible conversation about retirement. As with everything, the proof is in the pudding. And what the essential problem that they wanted to solve is how to actually get users engaged with their pension. So obviously we set up this solution, it's been running for months now, but after the first 7 weeks, we checked in on the results. And they found that 69% of users had activated their account within those first 7 weeks. 60% of people had added an additional account to Mercer Money. So Mercer Money comes preloaded with your pension data, so you see your pension data as soon as you log in, but then you can add other accounts, pensions, mortgages, investments, savings, credit cards, current accounts to their solution. And 60% of people were adding an additional account. So this proves that it's not impossible to get people to engage with pensions. And it allows you to see your money now and cash now alongside your long-term savings and long-term plan. And we can sweep money from one to the other. So it shows why open finance is so important in the pensions industry. And typically pensions companies see people log in maybe once a year to check their pension, and suddenly seeing 35% of people log in every month to check their pension is a massive increase and a fantastic opportunity for them to engage around finances. And in fact, they averaged 4.6 visits per member, and the average time per unique user was 53 minutes, which I think is testament to the great material that Mercer have pulled together and put into their Content Hub feature that we provided for them. 39% of visitors were over 50, which just shows that technology really isn't a barrier anymore. I think we used to say that age put people off using technology, but I think those days are pretty much behind us. So I'll move on to another example now. This is the Big Exchange. They are building a community focused on making positive impact. And they want to create a financial system that's available to all, an inclusive financial system. It's part of the same business as the Big Issue. And what we're doing there is we're providing their digital wallet and their marketplace. And this really is about the win-win-win of impact investing. So what does that mean? Well, the consumer wins because they get a great return, which they just simply cannot get these days by leaving cash in a bank account. So consumers happy. The Big Exchange wins because they increase their assets under management. Pretty simple and straightforward. But the world really does win. The world is a better place through the projects funded by the Big Exchange. So you're getting a return, but you're also doing good through your investments. It's fantastic. It's such a great way of investing. And our open finance platform sits as the digital wallet, and it's got today's money, so your cash and your current account, credit card, it's got today's money sat alongside tomorrow's money in the form of their Impact ISA. And what we can then do is continually find the spare cash that you didn't know you had. I strongly believe that all of us could be 10% better off with our disposable income if we just got on top of our financial admin. And so we automate that financial admin and find the spare cash you didn't know you had, and automatically sweep it into your investment ISA. It's quite exciting. But as I mentioned, they also, it's the same company as the Big Exchange, and they're able to use, or will be using, QR-powered payments. So I'll give you another example, a live example of payments shortly. But this is the ability for someone to scan a QR code. There's lots of different ways to trigger a payment, but QR codes are proving popular thanks to the NHS app, actually. But you can now scan a QR code, so it could be on the front of your Big Issue magazine, and that will allow you to transfer money directly from your bank account into either the Big Issue vendor or the Big Issues company bank account directly. So no more, sorry mate, I haven't got any change, I'm afraid. Now it'll be, I've got no battery. Hopefully not. We all have smartphones with good batteries these days. So yeah, being able to make those payments and without the layers and layers of charges that we're typically used to seeing with traditional payment methods. Okay, I think I've 2 more examples. So the next one's Newby Building Society. I think their quote's fantastic. There must be a fairer, quicker and more cost-effective way to run affordability checks on customers. And for anyone that knows me, this is a topic very, very close to my heart, and I could probably do a 2-hour presentation just on this. So let's just get straight into it. So here's an example of somebody. I'm going to talk you through them, and this is what we can tell from their data that they choose to share. They choose to share as much or as little of it as possible, as they like, sorry. But they've chosen to share this data. So from the data that they've shared, we can see that they've worked hard for 15 years. They've had a regular paycheck coming into their account in a reasonably good job with a really kind of good wage and a reliable wage. You've never missed a payment, maybe a few bonuses thrown in there as well. And they've saved up. And after they've saved up for quite some years, they've decided to take a gap year and go traveling the world. But whilst they're traveling the world, they absolutely stuck to their budget and had a fantastic time. And they came back and arrived home and started looking for another job and almost immediately found one. And it was a job in a similar industry to the one they were in before, in a similar role, but slightly higher pay. So a little bit of a promotion. Fantastic. And they're thinking, right, I've done my traveling, it's out of my system, I've got a great job now, I'm really career minded, I want to buy my own house. Now, traditionally, using legacy kind of credit reference agencies, they probably get declined because they don't have credit cards, because they've had a gap year, so they look like they've not had a regular income, etc., etc. So they just get a no. And if they contacted their provider and asked why they got a no, the provider is unlikely to be able to tell them why, because the data they've used has not been shared, has not been acquired with proper explicit consent. But in the new way, in our way, then you absolutely get consent. You get to see all of this journey and understand that this person, the decisions that they've made, they've all been sensible and all been financially sound. And actually, they look like a fantastic person to lend to. And therefore, you can make a decision. And you can do it all automated, so it's faster, cutting down on your underwriting. And to make it better, because the data's been gifted through consent, if you want to have a discussion about it, it's really easy for the provider and the individual to have a discussion, either fully automated or face-to-face, it doesn't really matter, to explain how they could have got a better deal or what behaviours are good or bad. So it just brings back that almost in-branch lending decisions that we all hark back to. It brings that back, but in a modern, automated way. We now know the individual, but equally the individual knows the lender. So I'm a big fan of this, and I could talk about this for a very long time. But I will move on to my final slide. So I hope I've given you a flavour of all the opportunities opened up by Open Finance and how it can benefit your company. If you're still in any doubt, I absolutely love talking about new propositions. And yeah, absolutely happy to go for beers, tea, coffee, virtual at the moment, to talk about what you're trying to achieve and to explore how Open Finance can help you. It'd be an absolute delight to do that. If I still haven't convinced you and you just want to dip your toe into Open Finance and just see what it's all about, I really urge you to build it, to give this a try. This is a solution that we built for the Open Banking Excellence. They run a series of events. They're really fascinating. Definitely recommend signing up to them and listening to them. But at the bottom of their page, you have this QR code, which you can scan, and that will take you on a payments journey that we've built for them. And we built that in partnership with Striva. So we're the world's first open banking powered charity donation tool that's got gift aid built in. But we don't charge anything for this. So every single penny that you donate will go to that charity. So unlike a lot of the other alternatives where a significant percentage disappears into the payments network, all that money will just sweep straight into that charity's bank account, and they'll get it within 15 seconds of you sending it. So I'm now waffling to give you plenty of time to scan that QR code. If you would like me to move on and finish the presentation, you need to scan the QR code so that I can get off this screen. So in all seriousness, I think I've spoken at a pace that allows for a few questions now, and I'll shortly be joined by some of the experts in the world of open finance. I know a fair amount, but some of the people on the panel I doff my cap to. So please stick around and ask any questions that you've got for us. I promise you there will be no bad questions and nothing that we're not prepared to answer. So please ask away. And on that note, Helen, I'm going to stop sharing and hand back to you.
Dan, thank you. Thank you very much. And also thank you for showing what I believe is one of the best use cases in the market, our QR code. And let me tell everybody that it was an absolute delight to work with Moneyhub. And Moneyhub's QR code, which is supported by Striva. Striva have a product called Swift Aid. It's the sort of gift aid for open banking. And that supports our 3 charities, which is My Bank, SAFA, and a children's hospice in the east of England. And that QR code is, as Dan said, the world first. And the fact that Moneyhub have done all that work pro bono speaks volumes to the DNA and the ethics of their company. So Dan, I was fascinated with that presentation, particularly talking about your ethics with around what you're doing for the big issue. Absolutely, and I do hope that everybody looks at this presentation online, because there's a lot of content to share and to take in the first time round. So we will be posting this, and I would invite everybody to go to Moneyhub's website and to download this content and to share it. Dan, we have got quite a few questions. Let me go through them. James, good morning. Now, James has got a great shout out for Dan. James, I'm going to leave that, sorry, for Sam. I'm going to leave that until Sam joins us, because I think she should hear those lovely words you're saying about us. But James has got a question for you, Dan. And here it is. Does the big exchange provide ESG drill down across funds to wrap products like ISA and SIPs? So
that's probably a question. Well, yes, they do things like that. That's not our area of expertise, of course, but yes, that's what they are doing. So, but they're launching a whole load of ESG funds effectively.
Okay, thank you. I've got another question. Good morning, Dan. Great for you to have joined us. Hope you're well. Dan is asking, and I think I'm not absolutely entirely sure this is one for you, but I will ask you. Amazon is being sued, slightly controversial there, Dan, for using merchant data without consent here in the UK, in the EU rather. Is this going to hopefully level the playing fields for all platforms?
Yeah, so to do what we do, you have to be regulated. So this is a regulated activity. It also requires consent. The flows are really quite set. You can't circumvent them. And they're monitored. So you cannot really get consent to do something without it being legitimate. But we always go one step further, because we genuinely believe that the consumer should be in control. They should know exactly what their data is being used for. So I absolutely do think it levels the playing field. And there's a number of different legislation changes happening. I talked about PSD2. We've also got GDPR. There was an announcement last week. I think all of the credit reference agencies were in the news last week for getting their knuckles wrapped for sharing people's data without consent. So these big giants have had it kind of a free run of it for the last, I mean, great models 20 years ago when there was no choice, but they're not fit for purpose in the modern world. So yeah, I do think it levels the playing field, but it actually levels the playing field for the consumer. It's the consumer that benefits in all of this, and that's what's fantastic.
Okay, Dan, we've got quite a few questions coming in. You've certainly got everybody to engage. What I'm going to do now is invite the rest of the management team from Moneyhub to join us on stage. So if we give them a little time to do so. So we're going to have Dan, who's going to stay where he is. He's going to be joined by Vaughan, who is the Director of Sales, by Dave, who is the CTO, and by Sam, who is the CEO. So we'll just wait for everybody to join us. Good morning. Hello.
Good morning.
Hi. What I would like is everybody just does that virtual round the table, a quick hello and what you do so everybody can hear from you. And then what I'd like to do is just finish off answering some of the questions before we kick off into our session, if that's okay. Yeah. So, Sam, please, everybody knows who you are, but please, tell us a little bit about Moneyhub and what you're doing with them and where you sit in the ecosystem, please.
Well, Helen, how long have we got, right? Because I could talk about Moneyhub forever. I love Moneyhub. I know I'm biased, but I'm telling you, it is such a wonderful product because of I think what you've heard a little bit from Dan this morning about, the emphasis on a truly consumer-centric approach, which I'm such a fan of, because I really think the consumer has to benefit better in terms of our money and in terms of our data, which we've touched on a little bit. And I think from some of the questions we'll get to touch on more. But also would love to give a bit of a shout out to Bristol and to this whole event. I don't know how many of you know, but TechNation recently released some data on the top 15, VC invested areas, and Bristol made it to number 11 in the whole of Europe and the UK, but number 3 in the UK. So if there's any doubt that the place to kind of, drive a bit of innovation and get going, then I encourage everyone to think about Bristol and the Southwest. But on top of that, I have my own little story. I didn't know Bristol that well until I joined Moneyhub, and I have to say it is the most wonderful. It's like a hidden gem. So I think, obviously with the changes that we've now experienced through COVID, where remote working is much more possible, I suspect Bristol will be a hotspot for the London exiters, because it is brilliant. So yeah, so there you go. That's me in a bit of a nutshell.
Thank you, Sam. And before we go to Vaughan, I would just like to read out and give James a little bit of a shout out. Sam, I thought you might like to hear what James has said in chat, and I'll read it for everybody. I met Sam Seaton at our steering group, and this is for the Money and Pensions dashboard even. And it was great to see how passionate Moneyhub is about solving people's money problems. I mean, that is an amazing endorsement. Yeah, you also
lovely, James. I mean, thank you very much. But I really do believe it. I have to say, it's to me, it's very important, and it's one of the reasons I'm on the pension dashboard industry steering group, because I really do think that group needs the injection of a bit of challenge, is the word I think I've been given before from that group.
And clearly your passion. Thank you. So Vaughan, would you just like to say a quick word about yourself and what you do for Moneyhub, please?
Yeah, sure. Thank you. Good morning, everybody. Yeah, it's a shared passion within Moneyhub. I think all of us somewhere along the line had an overdeveloped sense of natural justice or something, I think, as children. But my day job really is to work with the financial services players and to try and convey some of those concepts that Dan was talking about, and to help them really join the dots between their own business strategies and how data and open finance can make them a reality. So it's fabulous, again, to see case studies coming through of where we've made a difference, and that's what we're striving to do, is to help consumers and the industry work better together.
You certainly do. Some of the use cases that Dan shared are phenomenal, and phenomenal even in terms of how you are powering some amazing causes. Dave, please say hello to everybody and a few words around what you do, please.
Yeah, hi everyone. So yeah, my name's Dave Tong and I'm CTO at Moneyhub. So also sharing this passion for, how open finance can really help improve people's financial situations, help them better understand and make the right decisions. As well as kind of involvement in Moneyhub, also very passionate about open standards and trying to see that, in the UK and the EU. And it's interesting how open banking is now, going global. So kind of UK was a bit of a pioneer, but it's spreading around the world. And so there's a lot of work, which we're involved in trying to make sure that kind of we learn any lessons from what's happened in the UK and that kind of open standards are followed too.
Superb, thank you. So let's return to some of the questions that we are getting. Okay, so here's one from Andrew K. Hi, Andrew. It says, and I'd like Sam to answer this one to kick off with it. Is there a standard model showing how Moneyhub fits in with or complements providing existing digital offerings?
So I think it's difficult, Andrew, for there to be a standard. And the reason I say that is because it depends what the value exchange for the provider is. So it depends where they start. I mean, you can just take some of the big companies, L&G, Aviva, some of the companies I used to work for, Willis Towers Watson. They all have very different starting points when they embrace kind of open finance. So we have to be flexible to fit in with that value exchange. So really the first step is to figure out what's the problem they're trying to solve in the first instance. And they all start, ironically, with a different problem that they're trying to solve. So from my perspective, not about standards, about trying to understand the problem they want to solve and then actually underpinning it with, the kit that we've got to help them solve that problem.
Okay, thank you. Dan, would you like to add to that?
Yeah, sure. So I'm a product manager at heart, really. So everything I'm, which means I'm lazy. All product manager. If you're a good product manager, you're lazy. That's CV. And when you interview someone, that's the first question to ask. And the reason it's important that you want a lazy product manager is we only like doing things once and then reselling it or reusing it hundreds of times. And so I think trying to fit into a standard model is the wrong way of going about it. And actually, we've got to look at what is the right flow for each user, for each customer, what is their user journey, what are they trying to achieve, and then switch our tools around and plug them in the right way to benefit that particular use case.
Okay, thank you. So let's go back to some of these questions in chat, and they are flooding in now. So Marty Reed, hi Marty, has asked, hi all, what do you think is the next prime business area or sector set for disruption by open finance? So maybe Dave, you could kick off with this one, please.
Reading the new question for me. Can you just repeat that, sorry?
Of course I can. It says, what do you think is the next prime business area or sector set for disruption by open finance?
Yeah, I mean, it's tricky, isn't it? I suppose to Dan's point earlier, you can't always predict what's going to happen in the future. So, I'm bound to get this one wrong. But, the area we're seeing a lot of stuff moving in is everything to do with credit, credit decisioning. Because, as sort of Dan alluded to, it's a fundamentally kind of older and a bit broken model. So there's a lot of stuff happening around credit decisioning and, companies well beyond just financial services. Are involved in credit decisioning. So I think that's an area where already happening. Obviously, payments. We've talked about, and again, we've been involved at Moneyhub, and there's some announcements coming out from the open banking implementation entity. I think over the last few days about this, about variable recurring payments. And so really, that's for at the moment, a lot of us will have these subscriptions, and a lot of them are, we kind of enter our card details, and there's a subscription going off once a month or once a year, and it's amazing how many of us forget about those subscriptions, and or actually just the fact that I give a certain card number to a merchant, and that means they can drain my account if they want. There's no limit on it. Whereas what variable recurring payments is, which is built on top of kind of the standard open banking APIs, will allow me to say, well, okay, Amazon, you can take up to £100 a month, from my account, or on this subscription one, I can go into my bank account or go into a tool like Moneyhub and see, oh, actually, yes, I have these 15 subscriptions, and I can cancel them without even having to go to the person I'm getting the subscription from. So yeah, I think that whole area around payments is only just taking off already. So those would be my 2 picks.
Thank you, Dave. This is quite a good question for everybody to chime in. Dan, please, I can see you nodding away. Come on, share your insights.
Dave's picked 2 of my faves. I definitely think he's right with the lending and collections part of credit risk needs sorting out. So because Dave's picked the obvious next one, perhaps I will do something a bit more far out and off the wall. So I genuinely think we're not that many years away from having a tool in your pocket that, based on what you do with your life and your goals and aspirations, which it will know and learn, will optimize your money for you in the background. And so money management becomes available to everybody, not just the privileged few that can have financial advisors, but everybody will be getting day-to-day money management and will know when to go and get advice, proper advice. They'll have it all sorted. And I think that's not that far away. I think when we talk about the cars to horses or horses to cars, I think it's that kind of revolution. It's less than a decade away.
Interesting. Vaughan, I'm sure you've got some insight to share there.
Yeah, an area that I think is interesting is general insurance markets, or property and casualty. And I wrote a chapter a little while ago for FinTech Circle on how there could be greater innovation in that market. We've seen quite a lot that's been going on there in terms of the Internet of Things, and we've seen a lot of new distribution models, but primarily coming from brokers rather than carriers or even the reinsurers. And it seems to me there's a wealth potentially of open finance opportunity for them to use alternative data to mix and blend that for better underwriting decisions, better claims management. So I think that's a relatively untapped area of the market.
I would agree. Sam, where do you see the next big disruption in the marketplace? Please share your vision.
So I'm going to go a little bit further afield, but I think it's closer than what we realize, which is in the retail space in terms of advertising and marketing. So a little bit what Dan touched on, Dan Feeney, a question about the Amazon fine. I'm not sure how many people are aware, but the cookie policies next year tighten up another level, so you can no longer track people around, websites without their express permission about exactly what's happening. So it's starting to get much more difficult to follow the consumer on the traditional mechanism that Google and many of the other, Facebook, etc., have used to get to know you better. And I think really where we're heading is into a consumer consent-driven world where I choose what you advertise to me, and I get to pick. And I'll be very happy to get deals on all the whole stuff that's going cheap, because that's something I might need. But does Dan want to get all the horse ads? No. And do you want to get it when you can afford it? Do you want to get those? I mean, my big one is we went shopping for a new bed, which you do apparently do every 7 or 8 years, but I think we do it every 15 years. But anyway, I bought the bed. Do you know what I mean? We bought the bed, and I got the next. I monitored for how long I got followed around the internet. 3 months it was roughly, where I continually got told I might want a mattress or a bed, and the problem is, no one tried to sell me sheets. And I think I would have bought sheets for the new bed. I genuinely think that was a big miss, and I just think that is just sitting there waiting for the retail world to get into that mode of what I call much more consumer-aligned marketing retail offerings. There you go.
I would agree with you on that one. The questions are really, really flying in now. Dave, I've got one for you. This is from James Spencer. James Spender, rather, says, Dave, good point about open standards. Does Moneyhub have an extended open banking AISP API to include investments and pensions towards open finance?
Yeah, exactly. So look, as well as our sort of, essentially our white label offering, Dan showed you some examples, we have a full API platform. And so, as part of that, yeah, we, like Dan said, we've been offering open finance, from day one, really. So via our, open finance API, you can connect to get open banking data, but also pension data, investment data, loan data as well. So really trying to cover it all, also for things like house prices as well. So, anything to do with finances. So yes, we do. The other thing that we're doing is really working with the industry. So, for example, there's a open savings and investment initiative at the moment, where we're trying to push just kind of have common open standards there. Sam's involved, and the rest of us on the team as well in the pensions dashboard project, which might take a long time to come to fruition, but we're playing the long game there and really trying to push for open standards. Okay,
thank you. Dan, would you like to add anything to that?
Well, the only thing I'd add is I'd do a shout out. So we've got a surprisingly large number of fintech firms in Bristol that use our APIs to build their own propositions. So I think at least I'm sorry if I miss anyone, but I know at least 2 of them I think are speaking at this event. So Lumio and Rocket. So if you get a chance to listen to Glenn from Rocket, and I can't remember if it's Adrian I don't know who's talking from Lumio, I think it's Adrian. But if you get a chance to listen to either of them, they tell a wonderful story about what they're doing with open banking, but underneath it's our APIs powering it.
Okay, thank you. I've got a great question here from Louis. Moneyhub team, do you think open finance has to battle to win trust and permissions in terms of engagement with the fintech businesses, i.e. the leaders in deploying open banking, open finance capability? That is a great question for Sam to kick off. Sam, the whole trust and permissions.
Well, yeah, I'm quite. Vaughan and I disagree on this actually, so it'd be great to go to Vaughan after me on this. But you see, I think this is going to sound terrible, but I think we've got to be careful not to overrate the trust part of the consumer. I find that consumers are pretty savvy. They'll try things out. They may do it carefully if they don't trust. But to be honest, if the value exchange is strong enough and it's something they want, and be wary of convenience, because convenience trumps everything in my world from what I can kind of see and touch. So I'd be very careful that, I think it's always about the value exchange. So if you see a fintech business doing really well, it's because the fintech's got the value exchange wrong. I think we've seen that with so many offerings that have come to market. If the value exchange isn't strong enough, then again, I think the only way to win a customer's trust really is to do what you said you would do it well, and deliver on what you said you would do. So that's how I think that can be addressed. But Vaughan has a slightly different opinion.
Go on, Vaughan. Be provocative. We're dying to hear.
Well, I would preface it by saying that I am an advocate of the power of open data generally, and it is really just one branch really of a global movement really in terms of the benefits of open data. I'd also say it was true that for many years the financial services sector has benefited from a sort of asymmetry of information between the consumer and themselves, which has often made it to the disadvantage of consumers. So truing that up through access and transparency to better data, I'm all for. On the other hand, I think there are certain needs for appropriate friction, I think is the new phrase, so that people don't actually make uninformed decisions or go as far as self-harming. So something may be useful and relevant and engaging, but you may still end up with a poor outcome. So I think that's the real issue. And it was one of the debates when I was involved with working with the FCA when PSD2 came in, was where is that line? Where is the optimal point between benefits to the consumer and potential harm and exploitation through people being uninformed? So I think it's a really difficult line for all regulators. But certainly we need to true up the balance from where it's been in the past.
Yeah, I can see Dan nodding there. Dan, do you want to add on anything?
I probably sit in between Sam and Vaughan on this one. So I think there is a duty of care for like vulnerable customers. There's a great opportunity using open finance data to protect and do more for vulnerable customers. And you've got to be careful of that. I mean, there's a great story of one of our customers whose mum kept signing up to charities, and every month somebody'd knock on the door and sign her up, and she'd sign up and say yeah, and eventually she's giving away most of her income away to charities. So using open finance, they were able to set up a kind of we call it care and share, but care and share version where the data is shared in alert mode, which means that the daughter was getting alerted to say yes, it's crept up above, whatever agreed threshold, above £20 a month, and it alerts the daughter to say go and have a chat. So I think that the trust there, it's got to be purposeful, it's got to be clear, and it's a bit like when we do consent journeys. One of the things that we're pushing for, there's this in open banking, there's a 90-day consent period. Now, we actually think that's wrong, because in some cases you don't need 90 days. In some cases you only need a day or 20 days or 7 days. And you should be able to set an appropriate amount of duration. And so we actually think it should go further and put more control in the consumer's hands to have over their data. And I think if you start pushing for that, that helps build trust, because people will see that we have got their best interests at heart. We don't just take 90 days because that's the maximum. We take the appropriate amount.
I think I would just add to that I have a very strong view on, I know there's a lot of fear of the regulator, and I think Vaughan's made a very good point about the regulator. But you see, my view is if companies just don't do the wrong thing, then you're not going to get fined, are you? And you're not going to end up in the bin. So I have a very different view, which is that when you're dealing with financial services and people's money, the starting point is doing the right thing. So if you automate something, then you make sure you've automated the right thing, not the wrong thing. So I kind of just start from a very, very strong perspective that the onus is definitely on us in this industry to do the right thing. It's people's money. So yeah, and I think that just goes back. There's a question from Dan Finney about the ethical responsibility for Buy Now, Pay Later Club, which, how long have we got? Because, I could be here all day. I'm on a mission with the big exchange, actually, Jill from the big exchange, to do a buy now, save later button right underneath every one of those. I'm going to literally see if we can get a button under every one of those to do the exact opposite to that.
Dave, I can see you nodding. Do you want to add?
Yeah, I mean, it's at some point the regulators will catch up, I think, with the buy now, pay later. But I suppose to Sam's point, this is the thing. If you're doing the right thing by the consumer, you really, shouldn't have anything to worry about from the regulator. And of course, you do need to make sure you do all of the, filling in all the forms and things like that. But, at the end of the day, I mean, the Financial Conduct Authority actually, it's about conduct. And actually, my experience with them, they try and work. They don't always get it right, but that is their aim. And so, I definitely think there are quite a few ethical issues with a lot of the buy now, pay later. And, it's just a shame, that people could kind of push ahead with these things, and sort of, wait for the regulators to catch up with them, really. So I suppose that's something at Moneyhub that we've always, wanted to avoid. And so it's really being clear, about, there's other questions there about just selling data, and that's something again where we just think consumers should really know what's happening with their data, what it's being used for. So yeah, I suppose it's easy for us to kind of have these sort of points of view, but I suppose we're trying to put it into practice with how we operate as a business and who we partner with as well.
And just on the data one, just about the question about being paid for the data, I mean, I did look into that because I had quite a strong view. I thought, wouldn't it be great if people could get paid for their data? I mean, not just making it transparent, but actually upping the level of it and saying, and actually, you bank some of it in return. But I was actually quite horrified to learn how little value our data has. Now, I don't know if that will change. So it's an interesting one, but I actually said to the companies that I was talking to that we need to stop because it was pointless, because they were going to offer people £5 a year for their data. And, this is for all their transactional banking data. And I was just like, well, would you give access to your banking transactional level data for £5 a year? I'm like, I'm not doing that. And then I thought it must have been, I had in my head it'd be worth at least £50 a year, maybe 100. And then I thought some people might like that, right? An extra 50, 100 quid a year in your pocket. But I thought to myself, I actually cannot go to the community and say, I've managed to get you this great deal. I've got you a £5 for your data for a year. I thought, I'm not doing that. It's embarrassing.
I'd like to add to that, sorry, before I move on, because all these companies that are based on getting kickback commissions from selling your data off to energy switching services and all these other things, I'll put them on watch now, because if we do that, I'll give the money to the consumer. Those businesses are terrible. And I think there's a real opportunity for people to monetize their data and share that. So I'll admittedly pay for the service, but get some of the kickback that you're getting for switching energy. And we should be putting that into the hands of the consumer, because that's, to Sam's point, the reason there's no value on a per consumer level is people can get it a different way. And we need to stop that.
Clearly, this is something you all feel very passionate about. Dave, do you want to add your views here?
I mean, I mean, I don't know if Vaughan's got anything else to add really, but yeah, 100% with Dan, and I suppose that is the, I think the models are changing, I suppose, in terms of, one of the things that Open Finance does and going on from Dan's earlier point around AWS is hopefully sort of this democratization. So it's not just these really big players with these sort of very hidden business models, very opaque where the money's actually going. But hopefully, there's a lot more chance, people can come along, they can build on top of our platform, and actually they can offer a sort of service like Dan was saying, we can do it, but people can build it on our platform to actually offer consumers a cut. So I suppose that's my hope, that sort of open financing, takes away from these opaque hidden business models and enables, more transparent and more, just better for everyone business models.
So whilst we're talking about open finance, and I haven't forgotten, there is a question for you, Dan, around credit reference agencies, your fave topic. But whilst we're talking about open finance, here's a question. Will the banks, existing and new, end up being the main players in open finance, as they will build the most use cases with open finance APIs for money management? A lot will join forces with fintechs. Oh, now this is a great question. How long have we got?
Yeah,
kick it off.
Well, I'm going to say that the banks have had the ability to do exactly as you've described there. Well, for the last, some of them, Lloyds, isn't it? Haven't they been around for 250 years? So I don't see that coming anytime soon from the banks. I think they definitely will try, but where I see the real innovation in open finance coming is from the retail sector. And the reason I say that is because the retail companies are absolutely brilliant at servicing the consumer. That they live and die by the consumer. They follow the consumer. I mean, you've only got to look at, I was staggered to find that like Waitrose can get ice cream on the shelf in down south when it's 22 degrees, and the same kind of injection of ice cream on the shelf in Scotland at 20.5 degrees, because the difference in the temperature in the buying patterns, and they are that on it to get their products and services, to delight the consumer and to give the consumer what they want and to be fair to make money, right? They are on it. So when that industry arrives and embraces open finance, which they're just starting to do, I think God help the banks. That is my view.
Well, we've got just shy of 6 minutes left. So Vaughan, please, what's your view? I'm dying to know.
Yeah, I mean, Sam's right. You would think that if there was any part of the industry that could benefit the most from open finance, it would be the banking sector, because they have the most data points on most of us. It was an inauspicious start, perhaps, though, with the Competition and Markets Authority almost dragging banks to that party, and years of resistance, which we've not entirely seen the back of. But that said, the potential is certainly there with banks. They have become more open, perhaps, to working with fintechs, but there's still a legacy of not only very product-focused systems and thinking, but also a certain fear about a shift from margin-type products and the loss of shareholder value in a move towards a more open finance proposition. And that slowness of movement and ability to transform themselves, I think, opens the door to other players, whether that's new challenger banks or indeed in time, whether it's different forms of organization altogether. And in our experience, actually, at the moment, I could argue that employee benefit consultancy firms are further ahead in knowing their customers and bringing insight than the main clearing banks.
Yeah. Interesting.
It's a remarkable state.
Dan, banks are going to lead the way, or is it going to be collaboration with the fintechs, or are fintechs going to overtake them? I'm curious.
Well, that's a good question, isn't it? As I think Louis said in the chat room, we could be here for a while. But I think the first thing to point out is there are some fantastically innovative, knowledgeable, and progressive people within the banks. So it's not just a kind of banks versus fintech. We're all different. I'm sure not in Moneyhub, but I'm sure in some fintechs they've got people that are a bit slow moving as well. The challenge that banks have got is that they are built with risk mitigation at their heart, which is why you have committees for everything, so that no one person needs to make a decision, and monthly cycles for making decisions, so everything moves at a slow pace in order to stop anyone making a bad decision. It's just how companies like that work. And so I think they desperately do want to innovate. They do recognize, they just don't know how to go about doing it without with their current structures and models. So I think before that, we'll see a change in the way they operate. And already we're seeing some banks do that, either through working with fintechs in quite innovative ways, or generally just restructuring internally. But I completely agree with Vaughan. I think the real innovation, everyone talks about challenger banks. Challenger banks haven't done anything different at all that any of the big banks haven't done at all. I have no example I can find. But genuine innovation in this space is coming from outside of the banking sector, and I completely buy into that. The EBCs have been phenomenal in adopting change way faster than you would expect of what is effectively a pension provider. You'd expect them to be slow. So yeah, I think we'll see. It'd be great to work with more banks and get them where they want to be, but yeah, it's a lot of it's a mindset thing for the organisation as a whole entity, not as the individuals within it.
Thanks, Dan. Dave, you're the co-founder of Moneyhub, which means that you have been in this amazing sector for a good amount of time and will have seen a phenomenal amount of growth. So I would particularly left you to last, because you will have seen how the market has changed from the CMA 9 being regulated and mandated to comply, to the fintechs coming into the market, that whole collaboration piece. So I am really intrigued now, given the longevity that you've had in the market space, of what your insight is on this one.
Yeah, okay. I mean, look, it is amazing, how many things change. And, there's that quote about, we often underestimate, how much will change, in a year. But, we overestimate what will change in a year, but underestimate what will happen in a decade. And I think that is true. A lot has changed, in the last, 6, 7, 8 years. So I suppose, it's the fundamental difficulty, which, no one seems to have solved perfectly well, of large organizations being innovative, whether they're in finance or elsewhere. It's just really hard. And you can hire an innovation team and set them up in some, swanky office somewhere. That doesn't necessarily mean you're going to be innovative. So I suppose, my hope would be, like I said earlier, on this whole democratization. And actually, we're not stuck, with, I don't know, whether it's the Bank of Amazon or just one big bank in the UK and everyone's with that bank. I don't think that will be good. So I hope in a way that doesn't happen. And I don't think it will. I do think, there's going to be a chance, for a lot more individual things. I mean, if you look at what's happening even in retail, and the growth of all these sort of Etsy and these sort of platforms, people are kind of wanting to move beyond just mass market generic products. And I think the same will happen in financial services, where some people might decide, well, actually, no, I really, I mean, it's a crazy thing with all this whole ESG thing, because people, they have all their pensions, and that, it could be invested in tobacco companies that they have a very big, moral problem with. And they don't really know. So I just do think that, hopefully the way the world is going, both technologically and, with people's interests, is that there will be, many different types of services in the financial services space, really tailored to individuals. So that's my hope. And I think from the track record, I don't have much confidence that the big banks will be able to challenge that.
Interesting. So I'd like to ask Dan a question around credit referencing, which we know is your hot topic, and then wrap up with a sort of a group question. So Dan, if you can see it on chat, but let me read it to you. Does Moneyhub partner with credit reference agencies like Experian, Equifax, Credit Check? And what do you think of ICO action about the use of personal data for marketing? Go for it.
Wow. Okay. So I think maybe let's, so to answer the question, we don't work with any of the credit reference agencies at the moment. We've got a couple of clients that would like us to contribute towards rental recognition, which is a scheme that allows people to have their rent count towards their credit score. Whether improving your credit score or not is a good thing is a different debate for perhaps a different day. Specifically though, on the marketing side of things, I don't really want to talk about the legals so much, because I'd quite like that to run its course and then follow that one myself with a bag of popcorn. But like the whole world of marketing is going to change, and Sam's super passionate about this as well. No longer are we going to be getting adverts based on data that someone's acquired from Experian, because I once signed up to a MasterCard credit card and they've sold my data to Experian, and Experian have sold it to an advertising agency, and now I'm getting adverts on stuff. That's in the bin, not allowed. And it's going to get even more strict in next year when some more legislation kicks into this space. But what is allowed, and what actually is quite exciting, is I can consent to get information on things I'm genuinely interested in, or things that will genuinely help me. So if I share my spending at Shell and with Shell, and they can also see that I buy from BP and Texaco, and really I've got zero loyalty, but I do spend a lot on fuel, not in 2020, but in times when I could enjoy life. And they could say, hey, look, Dan, why don't you get a deal where you get all of your fuel from us, and we'll give you something. We'll give you a discount, we'll give you some loyalty points, whatever they want to do. But equally with adverts, I might be quite happy to get adverts from Mercedes, and Mercedes might go, great, I can see Dan's got a car lease with BMW, and he's had it for the last 2.5 years. So probably in 6 months' time, he's going to be in the market for a new car. So Mercedes suddenly can start marketing to me. But I love cars, so I'm happy, and it's relevant deals for me. So advertising's got a place to play in the world. I think whether you get rewarded for seeing adverts or whether you just enjoy seeing them, there's a place for adverts. But I'd quite like them to be tailored to me, and not because someone's just got my data through some secret squirrels thing that I've no control over. Right, I'm done.
Great answer. Now, it's a shame, but this is going to be the last question. We literally could have talked all morning. So your wise counsel now, please, Moneyhub management team, on sharing what people should look for when choosing an open banking or open finance provider. So the gotchas. Sam, what would be your wise counsel for everybody that's listening now?
Well, I personally think you should look for an open finance platform that's moving towards an open data economy, because I think this doesn't stand still. So that would be my number one. Secondly, I think work with people that are credible in this industry, because one of the problems you will have at some point is obviously you'll hit snags on the journey of what you take to market. I can't predict what they'll be, but really what you want is a partner that actually cares about you and your business, because if they don't, then you just don't get the help you need. And that just goes across all businesses. But I would just say be very, it's something that you can't easily put into a due diligence thing, but it's very important.
Agreed. Vaughan, the gotchas, what would they be?
Yeah, I'd certainly agree with Sam. I mean, we came from more of a holistic financial planning background as an organization. And I think, that ability to look at people and their situations in the round rather than narrowly focused on just open banking is really important. I think we've also got a great pedigree as a result, because the breadth of connections that we've got beyond PSD2 and the quality of our categorization engine are fundamental platforms really for giving good guidance or good advice. And I think those two core features really continue to differentiate us from competitors. So I would really examine those areas as a buyer.
Good guidance and good advice. Dave, do you have anything to add, please?
Yeah, so I suppose get your engineers to look at the documentation and the platforms. A lot of people can have nice marketing sites, about how easy is it to use. So I suppose we've done quite a lot of work in just trying to get people set up very quickly, in terms of with automated guides and things like that. So I think that is, definitely agree with all of what's been said so far, but get your engineering team to have a look. And I suppose, one of the things that, we try and do, and I'm not sure how many other people do, is having really responsive support. So we have, engineers on Slack who can directly work with engineers who are using our APIs.
And Dan, and finally you, gotchas. What would your wise counsel be to everybody that's listening?
I'd probably say beware of Greeks bearing gifts. If someone's willing to do something for free, get it contracted, lock it down, because the chances are if you're paying nothing, you'll get nothing. And or vice versa, if a large organization is saying, come and join our FinTech Accelerator, you can do a load of work for free and see how you get on. If you're a FinTech, walk away. Genuinely, we're proper businesses doing proper things. So treat it properly. If the company doesn't have a decent contract and doesn't treat you like a proper business, don't get involved. And also, if anyone's ever fearful about going through your due diligence process, walk away from them, because it should be a doddle. It shouldn't be hard. So I would, don't treat fintechs like they're not businesses, because they are. And I would, that would be my counsel.
I think that's great counsel. Sam, before I wrap up, I would like just to see if you've got any final words that you would like to say to everybody, please.
Well, just enjoy the rest of the Bristol FinTech, the next few days. I mean, it's been a lot of effort to put all of the different businesses together, and everyone's got such great views. So enjoy it is what I would say.
Thank you, Sam. Okay, so let me just wrap this up. First of all, the questions have been amazing. Let me just tell you, they have flooded in. But if you want to keep this conversation going, please will you email hello@moneyhub.com. And I can guarantee that you're going to get some more generous and open answers to your questions, as you have done this morning. So what I would like to do is just remind you that Sam is actually speaking at the FinTech West, which is also part of the Bristol Tech Festival, on the 12th of November. So that's this Thursday. And we've already had somebody say that Sam has a passion. So if you want to hear more of that passion, it's from 10 till 12. And Moneyhub will be posting details on their LinkedIn site. So if you want to go over to the LinkedIn site and register for that, you can. And we will also be posting this content at Open Banking Excellence, but Moneyhub will also be posting it as well. So all that remains for me to do is to thank you all for watching, and please do re-listen to this content and reshare it, and to thank the Moneyhub team for being an absolute pleasure. I've learned so much, particularly about the businesses that you help to power. So thank you, and everybody else, enjoy the rest of the festival. Take care now.